Welcome to Invest Giant. Learn, invest, build your net worth. Today, we're diving into the world of high-yield dividend stocks. And trust me, you're going to want to stick around for this. If you're looking to build a solid passive income stream, or even just accelerate your path to financial freedom, dividend stocks can be an absolute game changer. We're going to break down the top 5 dividend stocks with the highest returns right now. I'm talking about companies with a proven track record of delivering consistent payouts and helping investors like you grow their wealth over time. But before we jump in, remember, this is not financial advice. This is for learning purposes. Do your own research, consult with a financial advisor, and make sure these investments align with your own personal risk tolerance and financial goals. Now let's get into it. First up, we have ARR, or Armor Residential REIT. Now I know what you're thinking, REITs? Graham, those things are complicated, but trust me on this one, guys. REITs, or real estate investment trusts, are like the secret sauce of the dividend world. They're required by law to pay out at least 90% of their taxable income to shareholders in the form of dividends. That's right, 90%. So, what makes ARR stand out from the crowd? Well, they specialize in residential mortgage-backed securities, essentially investing in bundles of home loans. And with the housing market being as strong as it is, ARR is well positioned to benefit from that stability. Plus, they've got a juicy dividend yield right now, making them a super attractive option for income-focused investors. But here's the thing about REITs, and ARR is no exception. They can be a bit more volatile than your average stock. Why? Because their performance is closely tied to interest rates. When interest rates go up, REITs can sometimes take a hit. But here's the good news. Over the long term, REITs have historically outperformed the broader market. So if you're in it for the long haul, ARR could be a great addition to your portfolio. Just remember, diversification is key. Don't put all your eggs in one basket, even if that basket is full of high-yield dividend stocks. Next up, we have AGNC Investment Corp, another powerhouse in the mortgage REIT space. Now, AGNC is a bit different from ARR in that they primarily invest in agency mortgage-backed securities. What does that mean? It means they're investing in loans that are backed by government-sponsored enterprises like Fannie Mae and Freddie Mac. This added layer of security makes AGNC a bit less risky than some other REITs out there. And when it comes to dividends, AGNC is a rock star. They've got a long history of consistent payouts, and their current yield is nothing to sneeze at. If you're looking for a reliable income stream that won't keep you up at night, AGNC is definitely worth considering. But here's the thing about AGNC, their dividend payments can fluctuate a bit. Why? Because the performance of their investments is tied to interest rates. When rates go up, their earnings can be impacted, which can sometimes lead to a dividend adjustment. But here's the key takeaway. AGNC has a proven track record of managing their portfolio effectively and delivering strong returns for their shareholders over the long term. So if you're comfortable with a little bit of volatility and you're looking for a high-yield dividend stock with a history of solid performance, AGNC could be a great fit for your portfolio. Chapter 3. EFC diversification is key to dividend growth. Now let's talk about EFC, or Ellington Financial. These guys are a bit of a hybrid REIT, meaning they invest in a wider range of assets compared to ARR and AGNC. We're talking about everything from commercial mortgages and non-performing loans to residential mortgage-backed securities. This diversified approach helps to mitigate risk and provide more stable returns over time. And when it comes to dividends, EFC is a generous friend indeed. They've got a solid track record of payouts, and their current yield is enough to make any income investor drool. But here's the thing about EFC, their dividend payments can fluctuate a bit depending on the performance of their investments. That's why it's important to do your own research and make sure you're comfortable with their overall investment strategy. But here's the good news. EFC has a strong management team with a proven track record of success. They've consistently delivered strong returns for their shareholders, and their diversified portfolio makes them a compelling option for investors looking for both income and growth. So if you're looking for a high-yield dividend stock with a diversified portfolio and a history of solid performance, EFC is definitely worth a closer look. Chapter 4 EPR, Investing in Experiences Earning Dividends. Now let's shift gears and talk about EPR Properties, a REIT with a unique twist. These guys specialize in experiential properties. Think movie theaters, amusement parks, ski resorts, and even Topgolf locations. Yes, you heard that right. Investing in fun can actually be profitable. EPR's focus on experiential properties gives them a competitive edge in the REIT space. People are always going to be looking for ways to get out and have a good time, and EPR is capitalizing on that trend. Plus, they've got a long history of consistent dividend payments and a current yield that's sure to put a smile on your face. But here's the thing about EPR, their performance can be impacted by economic downturns. When people tighten their belts, discretionary spending is often the first to go. That means fewer trips to the movies and amusement parks, which can impact EPR's bottom line. But here's the good news, EPR has a strong track record of weathering economic storms. They've been around for over 2 decades and have a proven ability to adapt to changing market conditions. So, if you're looking for a high-yield dividend stock with a unique investment strategy and a history of solid performance, EPR Properties could be a great addition to your portfolio. Chapter 5, Apple, your ticket to hospitality dividends. Last but not least, we have Apple, or Apple Hospitality REIT. As their name suggests, these guys are all about the hospitality industry. They own a massive portfolio of hotels across the country, from Marriott and Hilton to Hyatt and more. Now, the hospitality industry can be cyclical, meaning it's sensitive to economic ups and downs. But here's the thing about Apple, they focus on select service hotels. These are your mid-priced hotels that offer a more streamlined experience compared to your luxury resorts. And guess what? People still need a place to stay, even when times are tough. This focus on select service hotels gives Apple a bit more stability compared to some other hospitality REITs. Plus, they've got a history of consistent dividend payments and a current yield that's sure to make any income investor happy. But here's the thing about Apple. Their performance can be impacted by things like travel trends and economic conditions. That's why it's important to do your own research and make sure you're comfortable with the risks involved. But here's the good news. Apple has a strong management team with a proven track record of success. They've consistently delivered strong returns for their shareholders, and their focus on select service hotels gives them a competitive edge in the hospitality REIT space. So if you're looking for a high-yield dividend stock with a focus on a resilient industry and a history of solid performance, APL could be a great fit for your portfolio. There you have it. The top 5 dividend stocks with the highest returns right now. Remember, these are just a starting point. It's crucial to do your own research, consider your risk tolerance, and maybe even chat with a financial advisor before making any investment decisions. Investing in dividend stocks can be a fantastic way to build long-term wealth and generate passive income. But remember, the key is to be patient and stay consistent. Don't get discouraged by short-term market fluctuations. Focus on the long game, reinvest those dividends, and watch your wealth grow over time. Thanks for watching. Don't forget to like, subscribe, and hit that notification bell so you don't miss out on any future videos. And as always, happy investing.